cheapest, most efficient, and most scalable form to collect and manage and organize investors from hundreds of different jurisdictions, different backgrounds, and different investment volumes.
Hey there, this is Masha and Xenia from Value.Tokenized. In this episode, we're interviewing Thomas Ermel and Florian Glatz of Fundament Group, a Berlin-based company that have recently received the approval from BaFin for the public token sale of their real estate-backed bond. Their sale is starting on Monday. Hi, Thomas. Hi, Florian. Thank you so much for being with us today at Value.Tokenized. It's a pleasure to have you with us. And my first question is, in July this year, Fundament received approval, the green light from the German regulator, BaFin, for your security token offering, backed by 250 million of euro in real estate backed portfolio. Can you tell us more about this initiative? What are your current goals and how is your progress going?
First question. Okay, I take that. Of course, we try to place a part of the planned volume via the public sale or the public offering, of course. And well, I personally hope that we will be able to convince interested people worldwide of our token or stable coin, how you also call it. This is exactly what we want to achieve. The unlimited opportunity kind of for everyone to invest together with us as experienced managers in German real estate. And I would also call the larger goal the inclusion of real estate investment. Of course, we also talk to institutional investors. Of course, we do not expect to raise 250 millions just the retail way by placing by all our public offering. But of course, we're talking to institutional investors, family offices, and others worldwide, by the way. That's actually our goal.
And talking about real estate, like retail investors into real estate, how would you address this retail investors, and how generally would you explain the benefits of tokenization to people who previously haven't dealt with it before? And should they know that it's actually, blockchain and the underlying technology?
Yeah, that's I also take that. That's kind of a funny question, because if we talk to institutional investors, tokenization is not really the first topic you're actually talking with them. But for me personally, the tokenization is, I take it as an add-on. We take actually a classic financial product, a security, and the only thing we actually change is the issue of a digital certificate, and not physically in the form of a paper. And that has advantages for us in terms of sales, reach, but especially for the token buyers especially the retail token buyers who decide for themselves if they want to use the possibility of tokenization. I think we have to really look whether we are actually talking about tokenization with retail investors. I think there is a lot of demand and for that technology, blockchain, the use of blockchain technology, and the institutional side of investments. There we are actually talking about way higher tickets. Well, we're talking about tickets of 25 to 50 millions. The aspect that you can say, it's tradable with a 50 million ticket, that's not really realistic. So the volume is just too high for that. But you actually need a high volume to generate traffic on the secondary market, I think. So, and that's why we actually said we need a high volume, 250 million. That for the crypto world, if you're looking back to ICOs, they probably think, well, that's a lot. But for me, as a person who is coming from the real estate world, I would say, well, that's not that much. So that's why we actually talking also to institutional investors, because we have a pipeline, we have a shareholder, and we have a pipeline we can invest to about and we're talking about nearly 7 billion euros. So, I mean, well, figure it out yourself. We need every euro we can get.
Yeah, of course. And I would also like to get the answer to this question from Florian, who's, as far as I understand, is responsible for the tech side. So, Florian, how would you explain what is tokenization and why it is needed to both retail investors and institutions? And what are the differences in the approach of this explanation, in your opinion?
So to us, we have a mission as a company, which is that we want to bring together this world of institutional and retail investors. For us, this is about financial inclusion, because typically institutional investors have traditionally always had access to great investment opportunities, for example, in real estate, whereas retail investors typically don't really get very good deals. And we believe that going forward, this should change. And looking at the market, we understood that tokenization is the way to create this financial inclusion, because essentially it makes it very cheap from a management and fundraising perspective to give thousands or even millions of small investors an opportunity to invest from all over the world into our fund. And by issuing these bonds, like the participation in this real estate investment, by issuing them as tokens on the blockchain, it's just, you know, a cheap and efficient way to scale this participation of the small investors. And this is one of the main reasons why we decided to go for a tokenized real estate fund.
And why hasn't been possible before without blockchain? What is the core value that this technology brings?
So I think you can ask Thomas how it was before raising funds and issuing bonds without blockchain, how awful this process was in terms of everything is manual, everything is paper-based, it's really hard to do distribution. Typically you would do distribution only in very localized markets, you couldn't do it globally. So tokenization is a really a placeholder in a sense for just digitalization in general. But particularly tokenization is this new trend that didn't actually exist for a very long time. And it's just the cheapest, most efficient and most scalable form to collect and manage and organize investors from, you know, hundreds of different jurisdictions, different backgrounds, and different investment volumes. And I think this is really the value where tokenization shines.
And talking about it from the legal perspective, can you tell us a little bit about how the preparation process goes? So how what's generally like BaFin's attitude towards tokenization as the technology for financial markets? Was it hard, and what's their approach?
Yeah, so being a lawyer, I was part of the process that would first write and then file the prospectus with BaFin and get go through the approval process, which took us around 8 months between handing in the prospectus with BaFin and then getting it approved. There were other lawyers involved here from the team, as well as Thomas, who's the experienced asset manager that just knows from a financial perspective how the product needs to look like in order to be sensible and attractive to investors. And to our surprise, when we handed in, we didn't know what BaFin would think about this, right? Obviously, BaFin has been following the development of blockchain for, you know, almost a decade. In 2013, BaFin made its first publication on Bitcoin, giving a first kind of understanding of how they looked at cryptocurrencies. And then in the years after, obviously, many more opinions by BaFin and publications would follow. But when it comes to tokenized securities, when we filed the prospectus in 2018, there was no guidance yet really available. And so to our surprise, BaFin from day one was quite sensible. They were not opposed. They didn't say, this is, I don't know, crazy, or this is something, we will look at it again in 10 years when this blockchain thing is not so new anymore, or anything the like. Quite the opposite. They had already a deep understanding of the technology. They understood the benefits, and they were able to understand why what we are doing is legally possible under the European capital markets regime under which BaFin operates. And although it took us 8 months to get the final approval, it was overall, I would say, a constructive process. We're very happy that Germany decided to be a place where these kinds of tokenized security offerings are possible, where they are even promoted now by politics. There is now an initiative in the German government to draft a law around security tokens in order to make them even more legally secure. And we're very happy to be part of that conversation.
And and Fundament, it's not the first STO approved by BaFin, because there were several other precedents, and it was not about the real estate portfolio that was tokenized, but the equity of the company and not a stake in a real estate fund. But what do you think, is real estate easier? Because right now, the majority of cases worldwide and tokenization overall, it's mostly about real estate. And is there any difference in why real estate is being tokenized mostly compared to equity of startups, let's say?
Real estate is a great asset class for tokenization because as an asset class, it's illiquid. It cannot be easily traded. And by tokenizing it, you just make it accessible to trading, which is interesting. Also, it's an asset class that many investors understand, right? So when you look at, for example, venture capital investment in startups, it's easy to sell an idea to many people, but it's really hard as an investor to understand if it's good investment, right? You need to be able to make a due diligence on many different facets of a startup. That's the technology they develop, but it's also how is the corporate governance working, and all these details. It's very complex. So I think this explains why real estate is currently so popular when it comes to tokenization. It's a great first product. Today, you cannot really tokenize equity in a startup, and this is also not what BaFin did earlier this year. So the prospectus approved, Fundament prospectus that got approved was the second prospectus approved by BaFin in Germany, and the first one was for a company called Bitbond. They are great friends of us, and we are, incredibly grateful to them that they have, paved the way for this revolution. I think they did a great job. And what Bitbond did is they collected capital through an STO, which they would then use to give out as credit on their micro financing or micro credit platform that Bitbond is operating. So this was not about startup equity. It was also a bond from a legal perspective. A bond is a debt instrument. It's different than equity. And equity itself, for it to be tokenized in the true meaning of the word, there needs to be a change to the law. And this will happen at some point. But for now, a bond is like a better instrument and the only instrument to really do it with today if you want to tokenize.
Well, especially if you talk about the second market trade. I mean, you have to think about what happens if you actually sell parts of equity to someone else, either peer-to-peer or via an exchange. That means actually today, well, especially in Germany, that the authority or the commercial register has to change, but that does not happen on the blockchain. So actually taking a bond or to securitize a bond is actually the only way to ensure that actually you as a creditor have creditor rights against the issuer. That does not work actually with real equity, not yet. I personally think that will take 5 to 10 years until that's going to change.
Mm-hmm.
from the legal perspective. I don't think, Florian, do you have another idea how long that was going to take? I mean, I don't think it's going to be possible.
I think it's the most realistic. That's what everybody is saying. That 5 to 10 years. That's where we will see actually something changing, on the global scale. But the first steps, they're obviously being taken like at the moment, and you're among the people who are doing this. So this is great. Yeah, I think I probably have one last question. It concerns investors. So for an investor investing, like just in the user experience in the process, investing in a normal security like crowd investing or investing in tokenized security, is there any difference here?
Well, if you look at the easy way to invest, no. If you look at the yield you actually get as an investor, also no. I think the real change, if you compare crowd investments and tokenization, is the possibility, if we have a regulated and licensed exchange market, probably next year, that you can really easily trade your tokens like having shares of a company, whatever, Apple or whatever. I think, and that is probably in the future the real benefit for investors. And of course, if you look at the transaction cost, it's pretty low.
And finally, I think I have just one more question. So your pre-sale starts just next week. And what's the timeline? What's your plans for the upcoming several months and maybe then the next year? So what's our next steps for Fundament in this space?
So the next steps for us is actually to, fundraise as good as we can. That also includes, of course, our public offering that starts next week. And we definitely hope that we will be able to actually close and stop our offering by end of the year. So, and for the next year, we already plan for the next security real estate token. And I think we will reach in the new prospectus to the BaFin, I think in 2 to 3 months roundabout. So we will have a new product next year.
All right. Yeah, I think this is it for today. Yeah, thank you very much, Thomas. Thank you, Florian, for being with us at Value.Tokenized. It was absolutely our pleasure. Yeah, and we wish you the best of luck, of course.
Thank you very much. Thank you very much, guys.
Thank you. Thank you for being with Value.Tokenized. We're glad to see you back after our short break. Don't forget to subscribe to our Twitter and follow us here on YouTube, and we'll see you next time.